Hello everyone, welcome back to Comparative Investing Techniques CIT channel. Today we are using a SGS listed company called RAFFLES Infrastructure to demonstrate the effectiveness of CIT intrinsic value as well as the importance of taking an entry with a deep discount below the intrinsic value. As such, we shall bring investor attention to our Facebook update. On the 16th of October 2020, CIT first completed our first review on RAFFLES Infrastructure. Based on its 2020 Q4 result, we estimated its intrinsic value at 0.545 cent. Close price was at 0.50 cent. As per our attachment, which also show at 0.50 cent, it traded slightly below the CIT intrinsic value. Do note, for CIT, we always encourage investor to take a deep discount below the intrinsic value as an entry price. So our preferred discount is actually a minimum of 50% below the intrinsic value to be taken as an entry. So for CIT entry price, we have stated here at 0.273 cent, which was 50% below the intrinsic value. So when the share price was at 0.50 cent, it doesn't indicate as an entry according to CIT standard, but that doesn't mean that investor need to follow, and you can actually based on your own risk appetite to decide your own margin of safety. But if you are investing via CIT, then this will be our recommended entry price. Alright. So when come on 13th of March 2021, CIT recommended an entry into RAFFLES Infrastructure when the share price plunged to 0.22 cent. Alright. So why do we recommend it as an entry? Because the intrinsic value that we estimated was at 0.66 cent. So if an investor have taken an entry on 13th of March 2021 at 0.22 cent, basically you are actually following the CIT entry. Nevertheless, when come to 9 June 2021, when based on RAFFLES Infrastructure 2021 Q3 result, we estimated its intrinsic value to be at $0. And why is it so? Because the company actually make a loss. So immediately we slash the intrinsic value to 0. And the share price on 9 of June 2021 was traded at 0.24 cent as per our attachment, which also show at 0.24 cent. So now we have done up a spreadsheet to recap all the information that we have solved with investor. So as per what we have saw just now, on the 16th of October 2020, when CIT first completed our review on RAFFLES Infrastructure, based on its 2020 Q4 result, the intrinsic value was at 0.545 cent. Close price was at 0.50 cent. But that is not our recommended entry because we will only take a minimum 50% discount below the intrinsic value as an entry for CIT standard. So when on the 13th of March 2021, when the share price plunged to 0.22 cent, CIT recommended an entry. Nevertheless, when it comes to 9 June 2021, based on its 2021 Q3 result, when CIT slashed the intrinsic value for RAFFLES Infrastructure to 0, alright, the close price on the same day was actually at 0.24 cent. Now, if an investor were to follow CIT intrinsic value closely, especially you also follow our instruction to buy at a deep discount below the intrinsic value, minimum 50%. So in this case, you have taken an entry on 13th of March 2021 at 0.22 cent, and when on the 9th of June 2021, when you see that the intrinsic value is actually less than your entry price, that means what you pay for this share right now is actually worthless because it's 0. Alright, so when you see that CIT have warned that the intrinsic value for RAFFLES Infrastructure have fallen to 0, and yet the share price on that day was still at 0.24 cent, so investor immediately can actually dump their stocks because the share price is actually more than the intrinsic value and also more than your entry price. So it actually gives you an opportunity to get out. Right, so when you actually dump at 0.24 cent, investors still able to make a 9.09% return it's not fantastic, it's not something that is worth for celebration, but at least you can get out without any loss. Alright, so if an investor did not follow CIT intrinsic value and continue to hold on to these stocks, when come today's share price of 27 September 2021, based on the current share price of 0.172 cent, we double confirm based on Yahoo Finance, the Raffles Infrastructure share price currently is trading at 0.172 cent. So if an investor have continued to hold on, basically he will make a loss, especially when we actually take the position based on 16 October 2020 at 0.50 cent all the way plunged to 0.172 cent. He or she will have lost a total of 65% from his capital. Alright, so you can see that following the intrinsic value of the stocks is very important, because they always tell us that the amount that we pay for this share, and in return for the value of the stocks, is it worth for us to continue to hold on to the stocks. If the value is actually higher than the share price that we pay for, of course you should hold on to the stocks to enable the stocks to continue to compound to an even higher return. But when the value of the stocks actually plunge to below the entry price that we pay for, and yet the share price is still did not follow the intrinsic value downtrend movement, then that actually gives us the opportunity to get out. So knowing the intrinsic value not only help investor to gain significant return from the stock market, it also help you to cut your loss, or even to get out without any loss, or even with a small profit, by helping you to eliminate majority of the risk when you invest in the stock market. Alright, so with that, for investor who is actually investing in both Singapore and Hong Kong stock market, before you take position in any stocks, we strongly advise you to submit in your valuation request to us via our Facebook comparative investing technique. For Singaporean we charge $20 Sing, for foreigner we charge 20 USD per valuation request. Thank you for watching this video, and goodbye.